10 years of trading and 10 important lessons I've learned. Number one, education. Education is very important. Without the right education, you're going to make mistakes, you lose a lot of money, and you're going to end up giving up. So education is very important, and where you get that education is very important as well. You need a right mentor, and you need a coach or someone to guide you along the journey, and somebody to hold you accountable for your actions. Number two, you need to have the right mindset, the right psychological mindset. Having the right psychological mindset will condition you under extreme pressure, and during moments of stress, when things are not going well, you need that psychological mindset to not get emotionally involved with trading the Forex markets. Because when you get emotionally involved, you're not thinking straight, it leads to uncertainty, you start revenge trading, FOMO, and every other issue that you can deal with emotionally. You're not thinking logically, and it ends up leading to you blowing your account, and comes a disaster. So the psychological mindset is very important. Number three, you need to have resources, capital to trade with. I do tell people to experiment on demo accounts, trying your strategies, but the demo account will not help you grow and give you confidence trading the markets. So I recommend you have, even if it's a $50 account or $100 account, go live, get that feeling. Practice makes perfect. Understand what it's like to go live into the market. And always, this is another important thing, less is more. You don't need a lot of money to make a lot of money. You have to learn and be humble and content and disciplined to manage a little amount. And when you can do that consistently, you definitely have the mindset to manage a big amount. So definitely less is more, and resources. That's tip number three. Number four, your environment. You need to make sure you have positive people around you, people to encourage you, because the worst thing you can have as a trader is being in a negative environment where it's stressful, competitive, and you're under pressure. So the environment is very important, because not being in the right environment will always lead to uncertainty, pressure, and bad decision making. Number five, development. As a trader, you always have to develop yourself. You always have to be up to date, just like a doctor. You have to read books on psychology. You're going to have to read books on management. You're going to have to read books on the mindset, on performance enhancement, and a lot more. There are a lot of books out there on the internet, books like Trading in the Zone, the Zurich Axioms by Mark Gunther. There are a lot of books out there that will prepare you as a trader and get you to that level of confidence. So I definitely recommend reading a lot of books. You don't have to read 10 books a day, even if it's one book a month. One book a month would definitely make a big difference over 4 months, 6 months, 5 months, a year. It's just about consistency. The more knowledge you've got, the further you go. So always read books that are aligned with your trading and will develop your psychological mindset, because the brain is like a muscle. Wherever you feed into it will help you make better decisions and strengthen your mindset to make the right decisions under pressure or not under pressure. So definitely books. Number six, risk management. You have to understand, you have to learn how to manage risk first before you can make money. A lot of us look at, I want to make money. We look at making money first, but ignore risk. But you have to understand they go hand in hand. If you cannot manage your downside, how can you get the upside? It's just like crossing the road. When you cross the road, you always have to look left, right, and go ahead. Because if you just cross the road without looking left or right, there's potentially a car could hit you, a hazard could hit you, could happen, and vice versa. Even when you're driving, turning lanes, you look left, you look right, and you go ahead and you proceed. That's why you have traffic lights in place. So in terms of trading and investments, you need to have a traffic light system, which is risk management. Always manage your risk accordingly to what you can afford to lose. Do not trade more than you can afford to lose. So risk management is definitely a big key factor here. Moving on to number 8. After you've been trading for a period of time now, you're going to see other people out there with Ferraris, social media telling you, oh, they made this amount of money, they made that amount of money, they got a robot, they got the algorithm of the century to make money. That is fine, that's down to them. But you have to understand, as an individual, as a trader, always tell yourself you are not in competition with anybody. You're only competing against yourself, nobody else. It's all about you. You're the one executing the trades. You're the one that's worked hard for the profit, and you're the one that took the losses as well. So you always have to focus and stay in your own lane. Do not let distractions and other people deter you away from your position. For example, I might take a short on the euro yen, and I see other traders going long, going the opposite direction. Fortunately, in this market of Forex, you can be right or wrong and still make profit. I say this a lot on my reviews. So always stick to your instincts and always make sure you're not distracted by what the other trader's doing or what the other influencer is doing. Number 9, very important, discipline and consistency and a routine. Always have a routine in place. Like, for example, when you're trading the Forex markets, you can trade on different time frames. I have my preference time frame I like to trade on. So always make sure you have a trading plan in place, because that trading plan will help you go through a set of procedures to avoid you over guessing your situation, and more importantly, holding yourself accountable and making logical decisions when you're trading the markets. For example, is price at a resistance level? Is price retracing? Is price ranging? Or is price making lower highs or higher lows? Always have a routine in place. Like, for example, you wake up in the morning, you analyze the market at 8 a.m., you put your orders in, you walk away. Maybe next morning, you do the same thing. When you close your positions, you look at your positions, what happened? Do you make money? Do you lose money? What went wrong? What didn't go wrong? How can you improve as a trader? Accountability. Always have that trading plan and journal. Number 9, preparation. If you don't prepare, you prepare to fail. So the moment before you even click the button, always prepare your trades. Analyze your trades. Check the Forex calendar. They've got a lot of resources and calendars on the internet. Just stick to one. Always determine your entry. And once you determine your entry, calculate and determine your maximum risk, because you're making decisions here. Not every decision is going to go right. But always make sure whatever decision you make in terms of risk, you always got enough capital to see another day. For example, you know your entry into the market, you know your risk. So I always tell traders, entry, risk, exit. Always know these 3 things before you trade. When you know your entry, you know your risk, and multiply your risk by 2, and that'll give you a potential exit. So whatever happens, you're always taking 2 times what you risk, and you leave the market. Finally, number 10. Number 10 comes with a combination of all the things I've said. Confidence. But confidence can also lead to overconfidence. Do not overtrade. Once you hit your target for the day, walk away. If you're bored, read a book. What can you do as a trader to control your emotions? Play chess, because chess is a game of strategy. Forex is strategy as well. Small, consistent moves to capture the king, you win the game. Sometimes you can even lose a queen and still win the game, but it's very hard. Just like trading, you can blow your account and be down to the last dollar. How do you come back and make profit? It's all about discipline, small, consistent moves. Don't look to make the big amount, like £10,000 or $10,000 in a day, 2 days, 3 days, 4 days, over leveraging your lot sizes. Make your gains consistently, small, consistent gains. For example, on the FTP program, you got $15,000. You got to make 10%, which is 1,500. And what it is just 300 pips multiplied by the maximum lot size. So some traders will go in with 0.5, trying to hit it in one go, in 10 trades, 4 trades, record rate. But what if the market's not on your side? So why not just take your time? Maybe instead of going at 0.5, go at 0.1, 0.2, 0.3. When you double up, scale down a bit. Control the trade. Don't let the trade control you, because at the end of the day, you're the one executing by clicking the button. So you should be the one controlling the trade and not the market controlling you. When the market controls you, you get emotionally unstable and it leads to a disaster and you blow your account. So those are my 10 tips.